the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
All right, let's see where we're going financially. Charles Tarbey joins us each week from Century 21. Hello, Charles. How are you?
Good, thank you, John.
Now,
happy Easter.
To you too. Now, we've got some market predictions here, and depending on where you live, you might be about to give us some good news or maybe some not so good news.
Look, it has been changing everywhere. There's been a lot of talk about the market crashing significantly last year, this year. None of that has eventuated. I mean, the market's certainly adjusted. But there are marketplaces in Australia, whether it's Adelaide or whether it's Brisbane, where the prices are still stable and in some cases moving up. Yes, we've had drops in Sydney and Melbourne, but that was expected because of the massive increases. And of course, Perth and Darwin are recovering. Perth more so than Darwin, but they got belted up, with the mining boom and so on. But overall, it's been a very interesting time because people have been talking the market down, which I don't mind, but when they talk it down to such a degree that it scares people, that's a little bit of a concern.
All right, so you've been looking at this and trying to pull some of the figures together and what we may be seeing in different markets, and the rental market's pointing us in a certain direction, you think?
Look, the stats are really interesting too because, John, I get real-time data from my organisation across Australia and New Zealand, so I can see what's happening as it's happening. And my data's been telling me for some time now that the vacancy rates have been dropping significantly in Perth. They were up around 11, 12, 13% in Perth going back less than 6 or 7 months ago. Now they're down in the 4s and 5s. And that tells me that marketplace is recovering. The areas that are of concern, even though vacancy rates are low in Sydney and Melbourne right now, is the glut of apartments that's still yet to hit the marketplace. And when those apartments hit the marketplace, some of them are coming up to completion now, some of them are still a year away. We're talking about thousands of apartments. That will probably have an impact on the vacancy rates. That will increase the vacancy rates and might even give tenants a bit of a break in some cases.
All right. So, and so with property prices and where they're going, I suppose you've then got to feed in what's happened with the election as well. Does that feed into what's going to happen in the next couple of months?
It always does. The election does have an issue, have an effect on the way people think. Some people say, I'll wait till after the election. Mind you, the Banking Commission, Royal Commission of the Banking, has had more of an impact than anything we've ever seen. And I think that we're still feeling the brunt of that, let alone the election. The negative gearing discussion is probably the biggest part of it. But in reality, the Royal Commission of the Banking has significantly changed the landscape for real estate, for people who are trying to buy, for those entrepreneurial people that might have used their equity to buy. That no longer occurs. It's changed so much so.
All right. So the Melbourne market's probably in better shape than the Sydney market, would you say?
Yeah, look, it is, but the Melbourne market's still got a bit of a drop to go because it's sort of always been a bit slow behind Sydney. And it's the same as the Hobart market, where it's risen quickly on the back of Melbourne's growth. Those areas there, I believe, are going to have a significant change in terms of pricing. I think there are still lots of areas in Melbourne where you can buy a property at a very, very reasonable price. But I think the top end is going to suffer a little bit, as I'm seeing it suffering a little bit in Sydney. The clearance rates are still very good, mind you. Sydney's clearance rates are higher this time than this time last year, which is quite significant. But I do think that the top end is starting to suffer a little bit, and there are areas right across still in Sydney and Melbourne where there are some good buys now for first home buyers, which wasn't the case a year ago.
Yeah. Look, I'm sure you've discussed this in the weeks before, but you've already mentioned it. So let's say we get to the end of May, there's a new government, and that new government manages to get through the Parliament, because they'll be trying to do this via the existing Senate. So they get through the Parliament the changes to negative gearing, which would apply from January 1 of next year. The moment that legislation goes through, we know what's coming on January 1. How is that going to affect the market in terms of what people do?
Look, every marketplace has an opportunity for somebody. Investors will probably be impacted. That's going to be the case. That could mean that first home buyers are not competing with investors, which could give first home buyers an opportunity. I'm not saying that I'm supporting all of the negative gearing aspects, because I think that when you buy an investment property, it's exactly like a business. You have income and you have expenses, and,
Yes.
and you should be able to offset each other. My only concern with this is that these changes are all coming in when the marketplace itself has already changed in a downward manner.
Yes, that's right.
When they started talking negative gearing before, it was when the market was spiralling out of control, and I think right now it probably doesn't need any changes, John. So
Yeah.
it will scare quite a few people. There's no doubt about that.
If you're an investor right now, let's say right now, and when we talk about negative gearing, of course, that's presumed that you're going to be making a loss. Are there places
Correct.
you can look around, say you live in Sydney, Melbourne, Brisbane, but of course you can invest anywhere in the country. So are there places where you could buy an investment property and have it positively geared? Because ultimately that's your best solution, isn't it?
Look, yeah, there is. There are plenty of places, and there are people who have kept properties over a significant number of years where the rental income is now much higher than, and they're quite happy with that. The only problem with seeking rental return, and this happened in the mining areas where the rental return was significantly higher than,
Yes.
than the capital cities, is that the capital growth is often not there. And capital growth is what you need to get that equity position to give you some chance of being able to purchase another property in the future. So rental return is one thing, but it's not always the one thing that people should focus on.
Yeah. And of course, look, the answer to a lot of these things is how long's a piece of string, but I always find it interesting if people are going out buying property, say on a Saturday morning, you're going out for the inevitable inspections and making a decision, you might be going to some auctions, and these days you'll pick up the Saturday morning papers, whichever one it is, and there's usually a listing of suburbs telling you, well, this is how much prices are going to drop in these suburbs. So if you're going along to an auction for a place at $1 million, say it's $1 million, wouldn't you be going there saying, well, hang on, they want $1 million for this place, but I'm factoring in the 10% drop, so I'm not going to pay more than 900. Does that create a problem?
It does create a problem. There is an upside to that, which is really quite bizarre. This is something that we weren't expecting. With all of the negative publicity that's been out there at the moment, there are more buyers out there at open for inspections that we've seen for a long time, because people are expecting, gee, maybe I can get a bargain. But when the bidding starts and people start to realise that maybe it's not as easy to buy something at a discounted price as they thought. And so we're having a lot of success at auctions now because of the fact that more and more people are turning up in hope of getting a bargain. And of course, they start the bidding, and people get a little bit heated at some auctions, and it can go for much more than what it's worth.
So
sometimes.
the emotional, I mean, we've seen those stories of where two people are determined to get somewhere, and you've got a very, very happy vendor sitting out the back hearing it going, can't believe this is happening.
As an auctioneer myself, I've conducted auctions where husbands and wives through divorces were bidding against each other. That's an even more interesting one. So there you are.
But it is a home, isn't it? And sometimes, you might pay more, and it mightn't be economically sound to go, say, 100 grand more than you wanted to, because it's a lot of money. But if the house is going to make your family happy and do what you want to do, and it's probably worth spending that extra cash for you.
Yeah, my daughter recently bought a property, and she bought it at the top of the market. And she said, "What do you think, Dad?" I said, Sarah, you're going to be there for 10 years. And at the end of the day, the amount you might pay now over a period of 10 years, it turns out to be quite insignificant. So you're absolutely right, John.
All right, Charles, very, very interesting. We've got a lot to happen in the market as we go through the year, but I think we've learned a fair bit today. And the way the market is moving, it is going to be interesting, particularly what happens with the election. It does seem like a lot of people are going to be waiting and seeing in the weeks ahead. Perhaps there'll be a bit of hiatus, you think?
I think so, John.
All right, great to talk to you. Thank you.
You too. Thank you.
Charles Tarby there with from Century 21 on what's happening with our markets. You may have some thoughts on that. 131873 is the number. It is the nighttime program. Steve Price is away this week. John Stanley looking after things. We've got a bit coming up in the next hour of the program, including pet food and whether you should be just feeding your pet just all processed pet food. That's coming up. Processed pet food. That's coming up.